Awesome. Top of the morning to you, my laddies. Good morning. This is Steve Paytech, realtor with Kentucky Real Estate Professionals, and today I'm going to be discussing with you the ins and outs, an FHA loan and how it works and why it is a great option for first-time home buyers. So let's go ahead and dive on in. Bear with me just a sec. I gotta take a sweet sip of this morning brew. I love it. Remember to live. Mm. All right. So getting right on in. An FHA loan. What is an FHA loan? What is it? What does FHA mean? FHA means Federal Housing Administration Loan. FHA, Federal Housing Administration. It's a government-backed mortgage designed to help individuals, especially first-time home buyers, who are purchasing their first home with a lower down payment, right? It has more flexible credit requirements than conventional loans. So, how does an FHA loan work exactly? With lower down payment requirements, first and foremost, they require as little down as 3.5%. If your credit score, if your credit score is 580 or higher, right? 3.5% if your credit score is 580 or higher. If you utilize certain banking institutions, like with my bank has it every morning when I look at my finances, look at my bank account, track all that stuff. It comes over on the right side panel. And not all banks offer this. I have banked with others that don't. But there's always a way to find out a relatively accurate or like precise credit score option. So keep track of your credit score. It's imperative to this process. And not to deviate again, I'm just so excited. It's the morning time. That's who I am. I'm a morning person. If your credit score is 579 below to the 500 area, you may still qualify for like 10% down. So something to keep in mind is, 3.5% down if your credit score is 580 or higher, or if it's 579 or lower to the 500 area, you may still qualify for like 10% or somewhere between, 3.5 to 10%, depending on like 5 to 580 credit score. So something to keep in mind. Uh, and I'm going to provide those links where you can check below your credit score for free. So, all right, number two, more lenient credit requirements. Unlike conventional loans that typically require your credit to be like in the 620 plus area, FHA loans allow approval for scores as low as 500. This makes it ideal for buyers with limited credit history or past financial challenges. If you watched my very first video about how I got started in real estate, first as an investor and then as an agent, you'll kind of you'll come to understand that when I first got started in real estate, I was a ghost. I had no credit track record whatsoever. So it really took me a 3 years process, 3 years to get into having credit and not being a ghost in terms of credit. So building that track record took a few years for me. Most people have credit cards or have taken out some sort of debt that they can leverage and repair if need be to actually have credit. So most people are going to have credit. It just depends on where you're at on the scale. Moving forward on that, so number three, government-backed protection. The FHA insures the loan, which reduces the risk for lenders, allowing them to offer better terms to borrowers like yourself who are seeking to borrow money for your mortgage to buy a house, right? So number four, debt to income ratio, DTI, more flexibility in that. FHA loans allow a higher DTI, typically up to 50% compared to conventional loans, which you would probably, if you speak with a mortgage broker, a loan officer, something of that nature, they would probably refer to the 2836 rule. We're not going to go into that. That's more of their territory. But understand that in with FHA loans, they require or they allow for a higher debt to income ratio, typically 50%. So when you're looking at FHA versus conventional loans, this is more for people who have a little bit, probably assumed a little bit more debt. So with government backing, they provide a little bit more flexibility, right? This means you can qualify with more existing debt, such as student loans or car payments or possibly medical debt if you had a spill of some sort, something's taken place and you didn't have health insurance. So number five, mortgage insurance, PMI or MIP, just two different ways of saying premium mortgage insurance or mortgage insurance premium. They use them back interchangeably back to back. You could hear it either way. Again, premium mortgage insurance, PMI, which is something that I personally would see because I have an FHA loan on my house, right? Or MIP, mortgage insurance premium. Now, going into this, since FHA loans have a lower down payment requirement, borrowers must pay premium mortgage insurance. When I see it, it's PMI to protect the lender. This includes the PMI, right, is basically 1.75% of the loan amount and can be rolled into the loan itself. So when you see this, when you see your when you engage with an FHA loan and you take a look at your loan statements or your mortgage statements monthly, you're going to see PMI or premium mortgage insurance, a percentage of what you're paying in your monthly mortgage, or on an annual basis, your annual payments, you're going to see that line item there, right? And typically, it's going to be in the range of probably about 1.75% of the loan amount in total, or or on a monthly sense, 0.45 to 1 point, no, yeah, 1.05. So it just kind of depends. Again, this is something that, based upon your debt to income ratio, your credit, and all that good stuff, you would discuss with your loan officer, mortgage broker, whoever you're speaking with regarding your finance specificity, right? Now, if you put 10% down or more, the MIP or PMI can be removed after 11 years, right? So after 11 years of having an FHA loan, so say it's 2025, you go through the process of engaging with an FHA loan, right? On a new house this year. So it's 2025. So by 2036, if you put 10% or more down on your house, it can be removed. Your MIP, mortgage insurance premium, also known or PMI, they use them interchangeably. Remember that. It can be removed after 11 years. Otherwise, it'll last for the life of the loan. So if you have an FHA loan and you don't refinance, you don't refinance or do anything like that, and it's a 20-year or a 30-year loan, right? Most FHAs are probably going to be about probably be a 30-year loan. Um, that mortgage insurance premium, right, will last for the unless it's more than 10% down, will last for the life of the loan. So the entirety of that 30 years that you are committed to that FHA loan, you'll be paying premium mortgage insurance. So it's this is one of those things, right? So anyway, moving forward, number six, loan limits vary by location. Now, what's interesting about this is FHA loan limits depend on where you're buying. Now, I know I focus on the state of Kentucky, but for those of you outside of the state of Kentucky who are interested in this, in 2024, FHA loans actually ranged. I mean, this kind of blew me away a little bit when I was doing my research on this. Up to 500,000. Some people bought their first homes, depending on the area, $500,000, right? For a low for they can range from 500,000 to 1.1 million in higher cost areas for an FHA loan. So that's just something from on a national scale to keep in mind. Um, Moving forward, number seven, only for primary residences, right? So an FHA loan is not for investment properties or vacation homes. You must use the place you're buying, the house you're buying as a primary residence. For me, I had the full intention of moving into and living in my duplex. I moved into half of it. When I moved in, it was only partially rented, right? So I assumed the renter in the other side of my property, and I moved into the vacant side, which was really convenient, which was really convenient. But yeah, so basically I live in half of the duplex, but I own the whole. So that's just my particular circumstance. This is how you can know I know what the hell I'm doing, right? So why an FHA loan? And let's kind of like move forward into why an FHA loan is one of the best options for first-time home buyers. Uh, and just to kind of like wrap around some of these cool bullet points. One is low down payment. It helps you buy a home sooner without needing like 20% down. Okay? On a conventional loan, you generally need about 20% of the cost of the property. So most people don't have that kind of cash sitting around when you're buying your first home. So that's why an FHA loan, depending on your credit and your debt to income ratio, you can have somewhere between 3.5 to 10%, which is significantly lower than the general requirements of a conventional loan. Number two, easier credit approval. Even with past financial challenges, you still may qualify. Again, um, somewhere between 500 to 580 will allow you 3.5 to 10% down. It just depends on where you're at. You talk with your mortgage your loan officer for that with whatever financial institution you're working with. Uh, Number three, more forgiving DTI, debt to income ratio, allows approval with pre-existing debts, student loans, medical, car payments, what have you, right? Number four, lower interest rates because they're government backed. FHA loans have more competitive rates. Number five, yes, you can use this is a cool little insight. You can use gifted money, right? So your down payment can come from gifts, grants, or assistance programs. There are assistance programs out there. So if you're looking into an FHA loan, check for assistance programs. I'll give you a cool little hack here. If you're still with me, go to ChatGTP and ask, what are assistance programs for FHA loans? I would just type that in, like literally, and it'll just give you a list. That's one of my favorite things about chat is unlike Google, which gives you a plethora of craziness, sponsored this, that, go straight to ChatGTP and just ask, what are the assistance programs for FHA loans? And it just boom, 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 and list them. So, fun little hack. To recap on this, an FHA loan, is it right for you? An FHA loan is a great option for you if any of the four, right? Any of these four criteria. An FHA loan is great for you if one, you're a first-time home buyer with limited savings for a down payment. Two, you have a credit score below 620 but want to qualify for a mortgage still. Three, you have existing debt but can afford a monthly mortgage payment. Four, you plan to live in the home rather than rent it out. If this is your first home, of course you're going to live there. It's like, but anyway, if you're thinking about buying your first home, an FHA loan might be the perfect way to get started and then get you hooked up. If you're not already working with a banker, with a mortgage broker, with a loan officer, let's get you hooked up with somebody. I got a couple people in mind who would love to discuss this with you, give a free consultation. You can reach out to me at 859-544-0890. Again, 859-544-0890, or shoot me an email, paytechrealestate5000@gmail.com. I like doing this. Paytechrealestate5000@gmail.com. Thank you guys. I look forward to hearing from you. Have a good day.